Well, the Bondi tram kept going to Clovelly and Coogee. Investors were looking for a signal to jump back into the market and take advantage of the historically low valuations. And the story that Germany is willing to recapitalise Europe's banks seems to have been that signal. European markets jumped sharply overnight as buyers flooded into bank shares, especially in France, Germany and Austria. Wall Street had another solid gain and Asian markets generally traded higher today as well. The Australian market, as measured by the ASX 200 index, jumped 3.65%, which was the biggest one-day gain since December the 8th, 2008, when it jumped 4.1%. After that, it fell another 13%, so all the optimists who'd rushed in that day didn't do too well. But hey, maybe it'll be different this time. Except the Europeans do have a habit of snatching defeat from the jaws of victory, and the US economy is not great either. In fact, consumer spending is remarkably weak, as this chart shows. The spaghetti is all the previous post-war recoveries in consumption, and the yellow line is what's happened from the December quarter of 2007 to now. So it is different this time. The West Texas crude oil price had a huge jump in New York last night, but that wasn't matched by the Malaysian tapas price this afternoon. Gold went up 1.8%, and looking at this chart, it may have stabilised at around the current price of $16.50 or so US dollars, which would be in line with its longer-term trend. Just back to the share market, and here are some of the highlights. The resources stocks led the way, with banks close behind. NAB did best, with a 5% gain after appointing former Treasury Secretary Ken Henry to its board of directors. And finally, the Aussie dollar went up again, crossing above 96 US cents, as well as getting above 72 euro cents. And that's finance.